So the CPI, Consumer Price Index, is completely rigged. It is way higher than 2.5%, what the bankers and government, well, that's the same thing, banks and government. Why is Consumer Price Index percentage rigged? Why such a big deal about this? Because of Social Security. The government is broke. They have to match Social Security with the correct CPI. They can't do it. There is already major issues with Social Security, with pension funds, as is in so many states. Now you add, they have to pay up a lot more. No, it cannot work. So this has just been, painted over and over and over again, lie after lie after lie, because the government is broke. So right now they're just, again, doing what they do best, using the middle class to pay for the debt. They're using you, they're using me. They're going to tax you to the point of no return. How? Of course, through inflation. Inflation is taxation. So this is how it's done. They are not using it, I guess you can call it honestly, just letting the markets play out the way it is. Yes, we could fall into a major, I would not say correction, this would be a meltdown if the rates are, let do their own thing, let them rise, let the market kind of level off where it needs to go. This would be a mess. So they're not letting that happen. So they're picking the, that's Lord Cuckoo Face. They're picking the easiest way out for them, which is letting the inflation run hot. And don't believe this nonsense that they have a switch that they can just turn on and off to let the inflation, go to the number they desire. It's just not going to happen. A lot of people are going to get wiped out. Your purchasing power is being stolen before your eyes 24/7. It has been happening. None of you are surprised by this. None of you are surprised by this crazy number of 34% of Americans are basically dependent on government subsidies to make ends meet. We know if they say 34%, it's probably 40 or 44%, which, again, we are not caught by surprise by any of this, because before COVID, a lot of mainstream news were coming out from left and right that many, over 40% Americans, do not have $400 cash set aside for emergencies. So again, none of this is by surprise, but what will surprise many is, again, I'm repeating, unfortunately, this will get a lot worse. So this is why I am sticking with basics. KISS, like Kiyosaki says, KISS, keep it super simple. I know what's always worked in inflationary, hyperinflationary times. Gold and silver, yes. Cryptocurrencies right now are doing really well. How they're going to react when the Main Street realizes where the real CPI is, since obviously a lot of people, I guess, just cannot figure out when they go to the grocery store to see that the inflation is not at 2.5%, or if they decided to buy a home or stuff like that, or pump gas into their car. So this is just unbelievable how so many people are just, brainwashed by all these lies. They cannot think for themselves. So I hope if you are new to this channel, if you have been just listening to certain channels, like let's say only Zero Hedge or only CNBC or only CNN, that you need to really look at the coin from both sides and even from the side, so that way you can put your own 2 cents or 2 satoshis in it in order to protect yourself and your family. So yes, CPI is a lie because of Social Security. Inflation is taxation, is going to run hotter. I'm looking continuously to get money out of the stock market. Every bigger 15-20% jumps in the stocks I pick that happen overnight or within a week or less, I'm pulling profits out. Yes, it is hard to watch this stock go up another 20% after you short it, but I just brush it off and go right back into a different sector, into a different stock. Why? Because while they're still delivering precious metals and other goods, hard tangible assets, livestock, if I can still put my hands on something I can touch and hold, I will continue using the paper currency to acquire these things, even though if I left it in the account, I can watch this grow on the digits on your screen when you see it multiply because the stocks obviously only go up with small corrections and they only go up. So yeah, it is not easy for a lot of people, cannot stomach this. Like I said, good luck to you if you're just going to hold a stock and just watch it do its thing for a year or two and you're not going to lose. If it melts up even higher, your purchasing power is going to be stolen a lot faster. Basically, the dollar devaluation is going to take care of business a lot faster than your stock portfolio, your 401k is going up. That's the game that they are playing. You have to see through this. So yeah, this is very hard to do. It is not easy to trade, even though in this environment is not as hard because most stocks are going up. Everything's going up. Besides what? Gold and silver, right? So you will say, well, why is that not doing anything? You got to look at it this way. There is timing for everything. And if the fundamentals, including technicals, which right now for gold and silver, when you look at technicals, the cup and the handle over 10 years that's been forming, it's probably one of the most obvious, the most beautiful technical cup and the handle for both silver and gold. And on top of that, fundamentals with money printing and everything what's been going on, it cannot be any higher than this. So it's just kind of a waiting period, and you have to understand how to play it. For instance, to close the video off, this will help you even if you are not investing in, let's say, gold stocks or stuff like that. If you're looking at any other stock or whatever it is, cryptos, I don't know if you can call them stocks or companies, we can call them it. You look at it from this perspective. B2G is my biggest holding out of all the stocks. Why? It pays dividend. Okay, it's over 3%, which is very good for the mid-tier gold mine that has good deposit, good balance sheet, and everything. 52-week high for B2G was $7.55. I bought at $5.50, and I was able to dollar cost average, meaning I've been buying dips, to about $4.70, which is right around what it is today. But what I got for me is the dividends, right? I also have another good part here that you need to look into. The 52-week low was close to my entrance. It was about $4.20, I think, $4.20. I'm about $4.70, so I'm not that too far of the 52-week low. And another part you want to look at, what happened last March when the big sell-off happened. This one was under $3, the B2G. It was $2.80, I believe, around March of last year. So I'm not that far off. Yes, it's still, $4.70 to $2.80 if it drops to that, but I have dividends to hedge off, to basically kind of have an extra out, if you will, extra cash flow to come in. And looking at when the new leg hits into these precious metals and we break through that 755 and I bought it around 470 is a good entrance. Now, when you compare that, for instance, for uranium, right now, let's say I talk about NXC, which has been just skyrocketing, 15% just a couple of days ago, today over 10% up again. NXC is close to the 52-week high. Yes, of course, it can go double from here because uranium is a small market. But I don't like that as much as I like the other one. Why? Because of these reasons. NXC is right at the 52-week high, and the 52-week low was way lower, and back in March it was just over 70 cents, and right now it's like at 4.40. So this is a huge risk reward for me to hold for the long term, even though I understand that the uranium market can just skyrocket at any moment, and this stock can go from 440 to like 740 within a couple of weeks. But too risky for me, that's why I like to take profits. So I will be exiting my position in NXC, taking profits. And if I see precious metals get slammed, I will use those profits a little bit into the stocks and definitely into the actual precious metals. So that's how I play it. Like I said, look at that March from last year. It's important to see. And look, are you a value hunter or you're just a pure gambler? Closing your eyes, buying Bitcoin at $64,000 and hope it goes to 164. I just don't do it like that. That's just me. And I hope this helps you. So yeah. Those are the plays right now. I'm sticking with the plan. I am long TOT. I am long Smith & Wesson. I am still long NXC. I am long B2G. I am not touching that one for a while. I will let you know when. Like I said, this one is one of my long holds. Everything else is just short term, 1 to 3 months in and out and taking profits. I will write more stocks that I talked about in the description box down below so you guys don't have to go back in the video. So I will kind of go into that a little bit more details. Instead of just talking about it, I will write them all down. As you can see, I don't have any script before me anyway, so I can easily forget a certain stock that I wanted to talk about. So take care, happy Cinco de Mayo, and we will talk soon.